Thank you to investing.com for sponsoring today's video. When you subscribe as a member, you get access to Investing Pro, a stock research tool powered by AI-driven insights designed to help investors make smarter, data-driven decisions. Find out more later in this video.
Today is the day. As you can see from the title of this video, you guys, what is going on? I just added in my first individual stock back into the new portfolio. We're going to dive into that today. This is a moment that I kind of knew what happened. I didn't know, to be honest with you guys, exactly when I would want to incorporate individual stocks back into the portfolio, but I did know that it would happen sooner or later. And about 2 weeks ago, I ended up adding actually 2 holdings, which we're going to cover today. We're going to look at the holdings. We'll do an updated view of the portfolio, but I also wanted to talk like high level, what went on with my decision-making process and why this is something that I ultimately chose to do. For those that have been following, you know that over the past 7-8 months, I've been documenting my switch from a portfolio of all individual stocks. I used to own 25, 26, 27 individual companies, essentially managing the portfolio of all stocks, to the polar end of the spectrum, going complete index investing, ETFs, the more passive hands-off approach. And I've mentioned many times that I've been loving the benefits that come with that, with the peace of mind, with the lack of attention, so to speak, that I need to allocate on a day-to-day basis to the portfolio. But one thing that I felt from my personal situation that was, I don't want to say bugging me, but deep down there was just this urge, or this itch is a good term. There was an itch for me to do a little bit more. And again, maybe that's because for close to 20 years, I managed, I had a portfolio of individual stocks, and it's what I did on a day-to-day basis for career, for work, and obviously on the YouTube channel, the stocks, this is what we've done for so long. It's just kind of part of me. I felt now was the time to slowly incorporate some back. And keep in mind, here is a look at the actual portfolio as of today. I hope you guys can see my screen here. I believe I have the recording going. But these individual positions that I've added represent 5% of the overall portfolio. So you guys will know that my largest 2 holdings at this point are the S&P 500 fund, coming in about 65% of the account. Then I have the BMO All Equity ETF, which is the asset allocation ETF, getting me exposure to other various markets across the world. This one comes in at 30%, essentially combining for 95% of the portfolio, and with a small portion of my asset pool, or investment capital, I've decided to include some individual securities. Well, just one really, and then another ETF, which we'll dive into in a second. And I guess the biggest takeaway for me that I want to share with you guys in this video that I kind of realized was, I think, like, numbers aside and like math aside, what's the best thing to do with your dollars mathematically, and what are the best places to put your money? That's obviously a huge variable that you need to factor into your investments. But I also put a pretty big weighting on finding an investment strategy and a portfolio that you are content with and makes you happy. And not to say that when I looked at my portfolio of ETFs, it didn't make me happy. Of course it made me happy, knowing that my money's put in the right places, and I know that over time, this is what's going to be, driving my, returns for retirement and building up my, essentially retirement nest egg. But I definitely did feel something missing, like a little sense of joy that I got and that I had for, many years of owning individual companies, owning individual stocks. There was like a little piece missing from that. Hence why, despite this not being like a move, I'm not buying these individual stocks because, oh my God, this company that we're gonna talk about today, Lockheed Martin, is going to, absolutely amplify my investment returns over the long term. It was more so a choice that made my strategy feel more true to me, and one that, when I open up my portfolio and when I look at it on a daily basis, I actually don't look at it on a daily basis, but you get the point of what I'm saying. It's a strategy that I feel aligns with what my desires are. And I think there is benefit in that. You guys can let me know down below whether I'm off base, or whether we should only be investing strictly based on like mathematical returns, or if it's important to have, the portfolio you enjoy looking at. I think there's a healthy balance, right? You obviously don't want to go down the spectrum of saying, well, I enjoy owning all these stocks, and that comes at the cost of your retirement pool and your retirement assets like dwindling away. Of course, there's a balancing act, but now when I look at my portfolio and I see the individual holding here, and again, with time, I'm sure there will be more, it brings me a little more joy. And I think that is something that I just wanted to start this video off with at the very top. And the big part about this being the weighting that it is that this doesn't take my huge mental load of the day. Of course, you own an individual stock, you got to pay a little more attention to it, but it's not like my entire portfolio is of individual stocks and I have to worry about 20 different stocks. It's one little holding making a very, very small percentage of it. Actually, while we're on that, you'll notice the second holding that I did add is ticker MCHI, which is the iShares MSCI China ETF. Now, you guys know I'm gonna get in the comments. Super stubborn over here. Still, I didn't learn my lesson apparently from the Chinese companies. That said, I will say since purchasing this a couple weeks back, it has continued on a nice little run. We're at about an 8.6% return. I mean, ironically, that balances out here, you guys. Let me get this to load up. That's balancing out essentially with the 8% loss on the Lockheed Martin position, which we're going to talk about in a moment. But a couple of reasons why I chose MCHI, another ETF, by the way, which gives me exposure to some of my favorite Chinese stocks, the Tencents of the world, the Alibabas of the world. Xiaomi, big technology company out of the States. You're getting exposure to all of these companies. And why I thought this was a perfect fit for my portfolio is that ZEQT, my asset allocation ETF, it actually doesn't have the allocation to the Chinese market in particular that I personally like. It has exposure to many different markets and other Asian markets, other European markets, but China was one that was a little bit underrepresented within this fund. So in my opinion, this fund at a 3% weighting kind of merges with this asset allocation ETF. Again, at the end of the day, this isn't an overly huge bet coming in at 3% of my portfolio to add into that, but just so you know, that's kind of the logic that I took when incorporating this fund. And again, it's one that I think long-term I can not really have to worry about. It's just kind of a piece of the overall asset pie geographically broken down. Now let's talk about the individual holding Lockheed Martin. If you guys caught the stock battle that Mark and I did a few weeks ago, funny enough, we both came into the stock battle without knowing what the other stock the other person was going to talk about, and we both ended up picking a Lockheed Martin. Now, that to me was a very nice reassurance that what I was looking at least he did agree on. And as mentioned, this position is down, but you guys know from following the channel, that doesn't bother me. That doesn't bother me when I'm buying stocks, when I buy a stock and it continues to drop, especially a company like Lockheed Martin, which has been, experiencing a pretty decent pullback. In fact, let's take a moment and dive in to Lockheed Martin, a bit of the analytics. And I want to thank the sponsor of today's video. Thank you to investing.com. Now, this is a new sponsor to the channel. Officially, the first time you guys are probably hearing about it, but this was a platform that I had been using for the past number of months. And in fact, if you look at the video with Mark and I, some of the screenshots were taken from investing.com. This actually is a very powerful portal that I think many of you guys can benefit. Let's go through a little tutorial or a little bit of an overview demo. I have a few stocks screened on my watch list, companies that I'm monitoring, but some of the things that really jump out to me that I like about this is that a very quick glance, you can get an idea of where they are valuing certain companies. Now, with any research portal, you always take it with a grain of salt, but it is a good, piece of the overall research puzzle. And what I love is that by scanning your essentially watch list of stocks high on your radar, you can get an idea of whether they're deeming their fair value target and where the stock is trading is offering some upside. In the case of Lockheed Martin, we see 26% upside. Company like Meta, you see kind of maybe the lesser upside. You also get, for instance, their overall health score. So a scorecard where, based on a variety of different factors, dividends, debt, etc., you get an idea of where the company stands. Let's take a dive into Lockheed Martin to take a look at what went into some of my research and something that you could consider too if you're interested in this platform. What I definitely like right off the bat is when it comes to exploring new companies that you may or may not be familiar with, it's got all the information that you need right here. And again, I don't need to dive into this because Lockheed Martin is a company I've been following for years, but getting familiar with the business, nice little blurb here that you could easily go for. I like here how it has essentially the highlights, the pros and cons, the bullish, the bearish case. In this case, what we see here is that Lockheed Martin management has been aggressively buying back shares. Boom, that's good. They have raised their dividend for 22 consecutive years. Boom, we know that's awesome. RSI suggests the stock is in oversold territory. On the contrary, considering both sides of the equation, 4 analysts have revised their earnings downwards for the upcoming period. So you got the mix of both, and this all factors into your decision. As I mentioned here earlier, you essentially have scorecards, if you will, where they deem the company to be here in terms of a financial health metric. They ranked a 2 for cash flow, a 1 for growth health, a 1 for price momentum. Again, the stock is essentially selling off quite heavily. Profitable health, however, scored well. And then a 1% on the relative value. In my opinion, you guys, and I talked about this earlier, trading at a PE of 18, 19 times, this is a stock that we don't believe is in bargain bin territory, but it is, in my opinion, one of these quality long-term investments that you don't often get at reasonable prices. You almost, you watch a stock trade for a prolonged period of time, it tends to trade at a premium. So to be getting Lockheed Martin, in my opinion, again, do your own research and due diligence, but to be getting Lockheed Martin at a fairly valued range is something that I'm happy to pick up on. Again, we've talked about this a ton, but dividends are a huge, I would say, bonus to this company. They've been an extremely reliable dividend payer. Here we see today they yield above 3% at 3.12%. We have really nice information here on things like the payout ratio, which is obviously a metric that is an important one to consider when looking at a particular individual stock to add to your portfolio. They're paying out 57% of their earnings. And of course, we have the growth streak. A number that we're always curious about is how well a company has been increasing their dividends over time. Again, we're not going to go through an entire review of this portal for today's video, but it has so much valuable information that you would need in order to actually, to execute your various research. One quick thing that I will just go over here very briefly is in terms of getting additional ideas. The Investing Pro platform I found has been very, very good one to explore with all sorts of different ideas that they put together. For instance, dividend champions, if that's something that you're interested in. Once it loads up, you have a variety of stocks that incorporate this little index or portfolio that they put together to give you ideas. Of course, you have a screener tool. So let's say, for instance, you're interested in finding a dividend company or a growth company or a company that trades in XY sector or on XY exchange. You can go ahead and absolutely go in and customize all of these filters. A ton of amazing resources, if you will. And that's just the tip of the iceberg. I mean, again, excuse me. I also got sick when I was abroad, hence the coughing. There are a ton of amazing resources that I would highly encourage you to go, check out. But I will include a link down below. And again, thank you to investing.com. In particular, the Investing Pro portal, for sponsoring this video. This is certainly something that I would suggest looking into. I mean, this is a service that I have been using because for the past couple of months, I knew I was, wanting to get back into the individual stock picks. And this was certainly a part of my due diligence and research tools that I found myself using. So again, I'll include a link down below, you guys. But to kind of bring it back to the portfolio and the decision making here, what I hope I'm displaying in this video with my actual approach is one of the ways that even as an index fund or ETF investor, like let's assume you broadly invest in the S&P 500, that's your entire portfolio, you can use individual stocks to help adjust your portfolio weighting and customize it, if you will, to increase, in this case, certain exposure to certain companies. One of the things about, owning the S&P 500 is it is, I don't want to say limited, but it is static in the sense of you are tracking the S&P 500. And as a market weighted index, as certain companies grow to represent more and more and more of the index, such as the Mag 7, well, more of your dollars are being allocated to those companies. Well, the lower and lower you go down that list, the less of your money is being allocated to those companies as well. And in my opinion, seeing a company like Lockheed Martin, which again, I believe is trading at a fairly, possibly undervalued range, I can utilize individual stocks in my portfolio, again, not overly aggressive, small 2.5% weighting to essentially bump up my exposure to that specific company. One of the questions that you may be wondering is that with the stock down 7.8% since purchasing it 2 weeks ago, How do I go about approaching that? Well, as I touched on earlier in the video, this doesn't concern me at all as a long-term investor. In fact, ironically, I mean, it sounds funny to say, but I actually like when the stocks that I'm buying continue to drop in value. If I was thinking that Lockheed Martin was a fair purchase when I invested in the stock at $459, I should be, in theory, believing that the stock is at an even better value today, unless, of course, any major information has come up within the last 2 weeks, which it hasn't. But I should be believing that this stock is even more attractive to purchase. And again, I'm not going to go in and purchase the stock right away, but it's one that I'll be monitoring with time, where if the stock continues to sell off, I will likely go in and add more to my position to bring down the average cost on this. The goal being that 5, 10, 20 years down the road, I will have been getting a lower cost or price on this investment. Again, assuming this continues to trend the way that it has historically, you obviously want the lower cost basis rather than higher, so it's not a big deal to me. One additional point on the topic of portfolio management is, just I guess sharing with you what my goals are and the future of my portfolio. How will it evolve over time? Well, right now I have about 5% allocated to other stocks beyond my core holdings. Again, I'm actually going to consider MCHI as part of that core ETF investing holdings for me. So I own about 2 to 2.5% in individual stocks. I definitely see a world where that allocation will gradually expand over time. Now, there's no rush for me to do this, and I'll certainly be keeping you guys updated as time goes on, as that allocation increases. But I see a world where in due time, maybe about 10% of my portfolio is allocated to some of my favorite individual stocks that I deem I want to have a little bit of extra exposure to. Now, in the grand scheme of things, this is following a belief or a strategy approach that I very much endorse and believe in, which is the core satellite strategy, the core and explore strategy, where essentially the core of my money, in this case, 90% of my investments are in my broad-based ETFs and index funds that I know are going to be trucking along for me for the future. And that 10% of my portfolio is, I don't even want to call fun money, like speculative money. It's still playing its role in, getting me to my longer term goals, but it allows me a little more wiggle room and a little more joy when managing my overall portfolio without putting the overall portfolio in jeopardy of underperformance because I've gone overboard on a number of poor picks. Obviously, the goal, again, you guys, is to make good picks in general, but that is where I foresee my portfolio moving with time. I'd be very curious, to hear what you guys think of this approach. Again, I'm kind of documenting things live as I go. And sharing kind of the insights about, how I've been enjoying this strategy, the parts that I've essentially not been enjoying, and again, not been enjoying, but, areas that I think I could tweak for my own personal situation. And in that case, adding in the individual stocks, it's one of those things where despite being down 8% of my position, I look at the portfolio and it's one that makes me just that much more happier. And I think at the end of the day, that's what it's all about, right? It's about finding the portfolio that works for you. And there is no one size cookie cutter, one size fits all portfolio for every single person out there, because with DIY investing, we are all our unique individual people. And I've found that, 8 months down the road, now is the time for me to slowly incorporate some individual holdings into the portfolio to make it suit my, investing desires a little bit more than I had previously. Well, let me know what you guys think down below. Again, I am now back in the studio here and back to filming more and more content, so I appreciate the patience while I was abroad. Again, thank you to investing.com for sponsoring today's video. I would highly encourage you guys, check it out, especially if you're the type of investor that's more in it for individual stocks. And that's a big part of what you do is exploring the company in and of itself. A very, very valuable tool that I'm very happy to endorse here on the channel. I'll include links down below. Once again, thank you to them for sponsoring today's video, but I'll wrap up there. As always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.